Welcome back. Outgoing Revenue Secretary Tarun Bajaj has clearly indicated the government's intent to rationalize capital gains taxes, simplify the regime. I have been speaking with Dinesh Kanabar, Sudhir Kapadia, Nilesh Shah and DP Singh about how they might go through the process, just starting a public debate. Nilesh, one of the puzzling things is that you get a debt long-term advantage only if you go through a mutual fund. Now, Reserve Bank has this retail direct. Why would I ever, although I have an account, why do I buy bonds over there? Because I will not get the tax benefit. Is that a rationalization that will come?
Logically, I have no argument against that. However, considering the nation stage at which debt mutual fund is and the number of people who are investing otherwise because of their greed into chit funds and collective investment scheme, I will recommend that at least for some time, let this taxation continue. Now, compared to ULIP, debt mutual funds are at a huge disadvantage. And compared to bank deposits, debt mutual funds do have some advantage. But Government of India gives an implicit guarantee for bank deposits. Today, there's no fear in the mind of depositors that there could be risk to their depositors thanks to the government's implicit guarantee. Debt mutual fund does not have that kind of guarantee, and hence maybe it is needed that they should get some concessional benefits so that we can popularize debt among retail investors.
Okay, take your point. There will also be a lot of corporates which will be using this, and the government may not want to give them tax advantages if they allowed indexation and
just one point, very few corporates will be invested for 3 years in India. They are mainly at the liquid end.
Yes.
And the net taxation and the capital gain taxation there is hardly any difference
for them.
So mutual funds tax benefits will primarily go to retail investors and marginally to some corporate investors.
Fair enough. Mr. Singh, let me ask you again the blanket question I asked the others. Is there anything that comes to your mind, that perhaps will be first off the shelf in the budget itself? Because after all, it's only 2 months to the budget.
No, yeah, one thing which comes in my mind is, today we are at the cusp of a big growth. And here the mutual funds must be given the mutual fund investor must be given some special incentive to route their investment through mutual funds. Because, a lot of research is a regulated entity, research goes behind it. And as Nilesh Bhai said, people should not end up putting in their investments in the stocks or in the debt instruments, which are otherwise looking very attractive. So just to encourage the right kind of growth, it will help not only the industry, but will help the investors also to route their investment through a very well regulated this thing. I think even if there is a change in the tenure or there's change something, there must be some special incentive if the investments are routed through the mutual fund route.
Okay, no, that you are an excellent spokesperson for your industry, Mr. Singh, but I don't think the taxman only thinks like that. If it was only to protect the small industry, why is it that 50% of your investments are coming from corporates? Technically, this taxman will say, I will not give it for corporates at all. They already have other exemptions. Anyway.
No, let it be. Let it be only for the retail investors, Lata. That's fine. That's the fine.
Okay, yeah. Okay. There may be another lobby against it, but I can see that that's something the government may want to look at to encourage the mutual fund culture. Mr. Dinesh Kanabar, I don't know the extent to which there are slabs, income tax. This gets, enmeshed also into personal income tax laws. So are you expecting anything in the budget itself, or will it be cosmetic in the budget and a larger code later?
It's actually a little bit of a tenuous question, Lata, if I may say so. I had really hoped, and I think all chambers of commerce have pitched very hard to say that the surcharge which has been increased for, so to say, the super rich needs to be relooked at it. And I would have sincerely hoped that it would have happened last year, or again, it could happen this year. My hopes are a little bit dampened after I saw what happened in UK when there was an attempt to reduce the tax on the super rich, and I don't know how will the government look at it. But clearly, that surcharge has no specific basis. It has just become a way of enhancing the rate of tax. As I mentioned earlier, that a surcharge has to be for a specific purpose, for a specific period of time. It cannot be an endless exercise. And therefore, there is a need to relook. And that, of course, has its shadow on computation of capital gains tax. Just one other point Sudhir made earlier about short-term capital gains and that it should be taxed at a normal rate everywhere in the world. But again, in India, we do have a situation where if it is a short-term capital gain on a listed security, we have a separate rate of tax. You have been asking this question, Lata, that will we see some low-hanging fruit and can something be happen in a budget and can something be long-term? But this is not too complex an amendment to make even in one budget. Sure, one has to take into account the capital market formation, the need to get monies into equity, the government disinvestment program and all of that. But really, clearing some of this is not too difficult a job at all. All that you need to do is to really put the holding period, the rates of tax, and then surcharge, of course, is not specific only to capital gains, but to all slabs of income.
Okay, fair enough. Mr. Kapadia, will the government also have to worry about the FPI angle when they rationalize any of the taxes?
I think absolutely, Rata. I was just going to respond to Dinesh's last comment. What I meant was that the normal rates which are applicable for
income tax,
normal individuals will apply for short term. But the fact that there is a 15% rate, there is a reason. And you rightly said, Lata, that the reason is, of course, the attempt has been over the years to keep increasing the flow of FPI and then, of course, FDI. And if I may say, and we all know the geopolitical situation, the uncertainty in the following year, I personally think Government of India will not want to bite the bullet so soon when we still need to attract a lot of foreign capital, a lot of investments, look at just the needs in the economy, etc. And mind you, as I mentioned earlier, one significant reform of having a 0% capital gains tax has already been addressed. So instead of just tinkering with rates, I think we should keep encouraging more investments, both domestic as well as foreign in the market. There are no exemptions being given under the current scheme. Aligning the holding period is a fair expectation. And I think we have a long way to go. And I'll just make one more point without getting into the politics of it. When we are talking about this debate between NPS, the defined contribution versus defined benefit, I would say as we mature and as we see that there is reasonable, sustainable return of investment money to be made in the markets, automatically this politically, induced demands of going back to a very archaic system, which has been, of course,
Mr. Kapadia,
excessive governments have wanted to reform
Mr. Kapadia, I don't think we have enough time even for short-term and long-term discussion. That takes it to another level.
No,
but I agree with you. Yeah, I agree with you.
It's important that we don't take the clock back and therefore not make the rate so unattractive.
Absolutely. I take your point over there. It's just that, that makes it another discussion. Nilesh Shah, just from this foreign point of view, last question actually for the discussion. Do you think if we are anyway much more competitive than others in terms of taxes, that's what you said, is there a scope that the rates may be increased, short-term or long-term in equities? That is the most important question for equity investors.
So I hope and pray that doesn't happen because we levied STT in lieu of short-term and capital gain. Now capital gain and STT both are continuing. And now if we increase short-term rates to normal income tax slab, then please abolish STT. You can't have cake and eat it too.
Yes, sir. I agree with you that the government really has a lot to watch for. But I guess in the days to come, there will be a lot that they will reach out to you for in terms of advice. Thank you very much for setting the ball rolling on where do we go from here on capital gains tax. Mr. Singh, Nilesh, Mr. Kapadia and Mr. Kanabar, thank you very much for joining.